Who the heck would ever dream of a 50-year mortgage? Stay tuned. So let's talk a little bit about this whole idea of a 50-year mortgage, which currently isn't in effect, but Trump has mentioned it and it's a possibility. Americans, as you know, we like to finance things for as long as possible to get the lowest payment. But there's obviously a downside, and that is paying a lot more interest. But I'm going to actually take you through the actual scenario of what that means. Because like I said, I build homes for a living. Here's a picture of one of my homes. And we're going to go through a scenario of someone buying this house for $200,000, which is what I sell for. It's a 3-bedroom, 2-bath, 1-car garage on a 1/4-acre land. Let's walk through the differences on this house, which is for sale now, by the way, between a 30-year regular mortgage and the 50-year proposed mortgage. And let's look at what the differences are and whether or not they would make sense for you. This is a starter home or a retirement home. It's 1,066 square foot, so that's why it's cheaper. First off, let's look at my house in the scenario, $200,000 home on the regular 30-year mortgage scenario. So on the 30-year mortgage, you'll see in the first year that you're paying out of your monthly payment, $191.60 is going towards your principal, and over $1,000, $1,033 per month is going to the bank. Let's fast forward 10 years down the road, assuming you don't move by then. So in 2035, you'll see that you have $4,148 going to principal and $10,550. This is just during that year. This turned into a yearly now. $10,550 going to the bank. And you'll notice that your balance is $167,901.19. Now let's compare that same house, that same purchase on the 50-year loan scenario and see what the difference. And now we're going to look at this same picture on the 50-year mortgage. Remember, both of these are calculated $200,000 at 6.2%. And this one will be over the 50 years. So if you notice in year one, you have a $1,082.49 payment, of which $1,033 is interest and only $49 going to your principal. So there's the big difference. So look at the balance in year one is almost the full amount, right? Let's jump down to year 10, where you have a same payment, but $1,031 going to interest and $51.49 going to your principal amount, which is terrible. And then look at your balance is still $199,496. So you haven't even paid $500 off of your principal in 10 years. Now, that doesn't necessarily make it a horrible deal. It depends on your plans and whether you stay in a home for a long time or not. That $150-ish a month savings, it might be worth it. To give you a little backstory on my houses, and I've built hundreds of little homes from 3-bedroom, 2-bath that were like 1,400 square foot with a 2-car garage. And I had one that was 1,230 square foot with a 1-car garage. That was a long house, not a cottage style. This one that I build currently is like more like this cottage style. But to give you reference, back in 2019, I sold that exact same house. We used to just put a carport or a hangover carport, aluminum carport on it. But back then they were $129, just 6 years ago. $129, and now we're at $200,000. That's a crazy increase for just 5 years in time. Remember, guys, back in the old days, before the Great Recession, your typical house appreciation per year would be around 3%. So for us to have gone up, what is that, somewhere around maybe 30% in just 5 years is ridiculous. But that's the world we live in today, and that's the way it is. If you guys have stayed long enough to watch this entire video, you can choose one of these other videos here at the top to watch more of my content. This is the very first video. I super appreciate you watching. Please comment below if you have any ideas or thoughts about these matters, and I'll try to respond. Have a great day.